Airtel Africa expects London IPO to be priced between 80 to 100 pence share. Kenya Parliament plans to block repeal of rate cap. Plus, the 45th annual meetings of the African Development Bank ends in Malabo, Equatorial Guinea, with participants resolving to cut down trade barriers. Hello and welcome to Business Incorporated. I'm Chimizi Obi. Well, we'll start off the show with the markets. And it looks like a good beginning of a new week for Nigerian stock market as the index tilted towards the north at intraday up 0.07%. The South African market is closed for a public holiday but ended last week down 0.86%. Egypt was up 0.29%, while Kenya closed negative on Friday. In the Middle East, Saudi Arabia's stock market rebounded, led by its banking shares, while other major Gulf stocks were mixed after last week's oil tanker attacks. At intraday, the Saudi index gained 1.08%, ROG Bank rose 0.6%, and National Commercial Bank gained 0.3% after JP Morgan raised their target prices. Qatar's index declined 0.85%, led by a 0.9% drop in Industries Qatar, and a 1.3% fall in Bauer Real Estate. In Dubai, the index edged up 0.01%, with telecom operator Emirates Integrated Telecommunications adding 1.6%. The Abu Dhabi index was down 1.09%. And in Europe, stocks were mixed today as investors await this week's crucial U.S. Federal Reserve meeting. On corporate news, Deutsche Bank is preparing to create a 50 billion euro bad bank as Chief Executive Christian Soin shifts Germany's biggest lender away from investment banking. Well, that's where I will start my conversation with Conrad this afternoon. Of course, he's at the Deutsche Bank headquarters there. Hello, Conrad. Good afternoon.
Good afternoon, Timmy. Great to greet you from the beautifully sunny town of Frankfurt today.
Great. Well, Deutsche Bank is planning a radical overhaul of its operations. The bank wants to slim down its U.S. businesses. It will also create a so-called bad bank to ring-fence poorly performing assets worth up to 50 billion euros. A bad bank is usually a last resort. Are people in Frankfurt worried?
Well, you're right about that, Jimmy, but I can tell you that the share price of Deutsche Bank is on the rise today here in Frankfurt trading. Obviously, many investors believe that this is a very intelligent strategic move and that there's nothing to worry about. You know, unlike with the other bad bank that Deutsche Bank had in place between the years 2012 and 2016, this new bad bank will not contain any toxic assets that you cannot sell on the markets because nobody wants to buy them. The assets in this new bad bank are actually assets that you can sell, but they have become useless for Deutsche Bank because of their more stringent treatment under regulation introduced after the financial crisis. So the fact that Deutsche Bank is getting rid of those assets is rather a piece of good news. It means that Deutsche becomes a bit less risky and a bit safe, a bit more safe. What also comes along with this discussion about a bad bank is the strategic move to severely cut down investment banking operations in the United States at the Deutsche Bank branch there. Up until recently, many top executives at Deutsche had hoped that this business could be maintained, that they could turn it around, that they could make it more profitable again. Turned out that wasn't possible. The managers failed to make this business really profitable, so they are going to downsize equity trading operations and also rates trading operations, which means that the bank does not need a lot of the underlying assets anymore. It can sell them.
All right, another corporate news out there from Germany. Lufthansa has come out with a profit warning. How much of a surprise is that, and how are investors reacting?
Very big surprise, Jimmy. You can tell by the slump of the share price of Lufthansa, which was around about 12% this Monday compared to last Friday night. So obviously, very few investors had priced that in. And well, the profit warning is quite significant. Lufthansa says that profit margin before interest payments and taxes will only be between 5.5% and 6.5%. Up until now, the forecast had been a profit margin of up to 8%. You know, after a number of no-frills airlines had lowered their forecasts in the course of this year, Ryanair in January, EasyJet in April, Wizz Air in May, there were quite a few analysts out there who said Lufthansa would be able to duck that trend because of its very profitable long-haul business. But of course, also Lufthansa is active in the short-haul and medium-haul businesses here in Europe domestically, and the competition is there so high, Lufthansa will simply not be able to return the profit it had hoped for.
All right, it's the beginning of a new week. So what's the general mood like on the trading floors in Europe? Give us an outlook on what traders are looking out for this week.
You know, Jimmy, I had to leave the building of the stock exchange today because of the beautiful weather today here in Frankfurt, but also because the mood on the trading floor really is rather subdued, rather negative. There is all the political risk, which really hasn't gone away over the weekend. And this week, traders will have to digest a number of monetary policy news. We have a Fed meeting in the United States, and in Sintra, Portugal, the European Central Bank is staging its yearly forum on central banking. This is attended by major monetary policy makers, a lot of economists. Also, Jean-Claude Juncker will be there, who is the EU Commission chief, and they will talk about their concerns in terms of inflation expectations. Today, the ECB updated its five-year forward, which is an indicator forecasting what investors think inflation will be like in the second half of the next decade, the 5 years starting 5 years from now. And the inflation, the average inflation expectation is to be only 1.1275. That's of course way below the 2% price target that the ECB has in mind when it talks about price stability. And it would mean, of course, no major monetary policy change for the next decade. That's really something the market has to grapple with.
All right, Conrad. Thank you, and enjoy that beautiful weather there. Hopefully, Daniel will give us all the updates we'll need on those developments that we're going to see this week. Enjoy the rest of the day. And in the UK, Conservative Party candidates to replace British Prime Minister Theresa May in a live TV debate on Sunday took aim at favourite Boris Johnson over his promise to take Britain out of the European Union with or without a deal on October 31. Well, let's talk to my colleague Juliana Olanka from our London studios on how the markets are reacting to this debate. Hello, Juliana. A beautiful afternoon to you. Good to see you.
Nice to see you, Jimmy.
Well, it's a morning after the TV debate where contenders to replace Theresa May as Conservative leader clashed over delivering Brexit. How's the market waking up to that weekend debate?
Well, Jimmy, just 5 out of the 6 candidates turned up for the fiery debate last night. Boris Johnson, as you've rightly said, was notably absent. Members close to his team consider that a strategic move. We're yet to find out if this strategy has worked in his favour. However, I must say, as of this morning, according to bookmakers here in London, Boris has an 89% chance of winning that contest. So there you go. Perhaps that's the answer. But let's have a look at the numbers. The FTSE 100 had started off in positive territory this morning, taking its cue from the Asian markets, but at intraday the all share has slid into the red, down 0.03%. The FTSE 100 is down 0.09%, and the FTSE 250 is down 0.22%. You spoke with Conrad there. The airlines taking the biggest brunt following that profit warning from Lufthansa, who have been hit very hard by low cost rivals. The German carrier carriers' shares tumbled 12% after their profit warning. EasyJet also down 3.7% and Wizz Air also down 4.2%. Let's have a quick look at currencies. Sterling performing well versus the dollar and yen today, up 0.05% on the dollar. A pound will get you $1.25. Down against the euro by 0.04%. A pound will get you €1.12, and up on the Japanese yen by 0.16%.
And what more can you tell us about this developing story that UK-listed firms will become the first foreign companies to be able to list in mainland China under a new stock link?
This is a groundbreaking story, actually, pretty historic, which is about to widen the effort to help build on economic ties between the UK and China. It's called the London-Shanghai Stock Connect, and it's open for business from today. And this will basically allow UK-listed companies to sell shares in China for the very first time. International investors have the opportunity to invest in over 260 of the 1,500 Shanghai-listed companies for the first time, as they're able to secure a stock market listing here in London. Now, the Chinese brokerage Huatai Securities was the first company to make its full debut in London today, and their shares rose by 2.5% in its trading debut. Now, of course, the London Stock Exchange Group is hoping that this link between them and Shanghai will generate more listings after Brexit, while China is betting on expanding global market reach, which is obviously being bolstered by the ongoing trade war with the US.
All right, let's talk Bitcoin. Bitcoin has moved above the $9,000 mark for the first time since May 2018. Do you trade in Bitcoin, Juliana? What's the talk around Bitcoin on the street of London?
Well, Chimmy, one Bitcoin is the equivalent of about £7,500. A little bit too much money for me, I'm afraid. Although I must say, if growth continues at this rate, I may regret not having invested earlier. As you said, Bitcoin has climbed to $9,381 over the weekend, which is a 13-month high. Interesting to note that rival coins also rose. Litecoin was up by 5% and Ethereum rose by 5.5%. Prices for Bitcoin and other digital currencies collapsed last year, but investor sentiment has helped with growth as there's been more institutional support for cryptocurrencies. And of course, there are those growing reports that Facebook now has plans for a digital coin, which has pushed everyone back into crypto world, everybody except me.
Well, I will advise don't be too quick to get into Bitcoin trading. Thank you, Juliana. Enjoy the rest of the day. While stocks in Asia were mixed as investors await a U.S. Federal Reserve meeting set to happen later in the week stateside. Mainland Chinese stocks were mixed on the day, with the Shanghai Composite down 0.195%. The Shanghai Composite, on the other hand, rose 0.2%. In Hong Kong, the Hang Seng Index rose around 0.5%. Over in Japan, the Nikkei 225 in Japan closed just above the flat line at 21,124 points, while the Topix slipped 0.45% to end the trading day. In South Korea, the Kospi shared 0.22% to close at 2,090 points, with Australia's ASX 200 falling 0.35%. In the U.S., stock index futures were higher in the morning as investors look ahead to a crucial Federal Reserve meeting this week. At around 3:20 a.m. Eastern Time, Dow futures rose 18 points, indicating a positive open of more than 37 points. Futures on the S&P and Nasdaq were both trading higher. Traders are largely focused on monetary policy, with Federal Reserve meeting due to start on Tuesday. Market expectations point to the Fed cutting interest rate this year, but several analysts say they do not see a change in monetary policy happening this week. Meanwhile, President Trump warned over the weekend that if he is not re-elected in 2020, there will be a market crash, the likes of which has not been seen before. Well, in terms of data, investors will be looking ahead to Empire State Manufacturing data at 8:30 a.m. Eastern Time, NAHB Housing Index due at 10 a.m. Eastern Time, and TIC data at 4 p.m. Eastern Time. There are no corporate earnings to note. And away from the equities market out there, Looking back home here in Africa, Airtel Africa Limited, a unit of India's Bharti Airtel Limited, has set a price range of 80 to 100 pence per share for its planned initial public offering on the London Stock Exchange. The IPO is expected to raise £595 million from the issuance of about 595.2 million to 744 million new shares. The company says the price range values it between £3.01 billion and £3.62 billion at the price range. Airtel Africa also says it intends to list its shares on the Nigerian Stock Exchange at the same time as the London listing. The company said conditional dealings in its shares are expected to begin on or around June 28, and the final pricing will be announced the same day. After the break, we'll look at the week's outlook in South Africa and more. To stay with us. We'll start off this segment in Kenya as the parliament plans to block an attempt to repeal a cap on commercial lending rates. Introduced in September 2016, the cap limits lending rates to 4 percentage points above the central bank rate, now 9.0%. It was supposed to cut the cost of credit for businesses and private consumers, boosting access to loans. In his budget speech to Parliament last week, Finance Minister Henry Rotich proposed repealing the cap. He said it was keeping banks from lending to customers they considered too risky. A similar attempt to remove the cap last year was rejected by lawmakers. Well, it's a public holiday in South Africa. However, last week saw some development that bugged investors. The main opposition party called for South Africa's graft watchdog to release a report into allegations the President Cyril Ramaphosa misled Parliament over a donation to his 2017 campaign to lead the ruling African National Congress Party. Meanwhile, senior ANC officials have continued to contradict themselves over whether the party had decided to expand the central bank's mandate in the wake of data showing the worst economic contraction in a decade. How will all of these developments shape the new week in South Africa? I'm being joined by an economic analyst there, South Africa, Trinity Nkube, to lead us into the market. Hello, Mr. Nkube. Thank you for coming through to us.
Good afternoon, and thanks for having me again.
So it looks like President Cyril Ramaphosa is in for tougher times. One major news last week was that the main opposition party is calling for South Africa's graft watchdog to release a report into allegations that the president misled Parliament over a donation to his campaign to lead the ruling African National Congress Party. Now, this is certainly unnerving investors and markets, particularly the currency market, isn't it?
Yeah, you can say that in terms of the whole political risks around South Africa, this is an unwelcome development because we're already in an institutional crisis where most of the top leadership, are implicated, or something is always around, happening around political risks, and of course, that is negative in terms of the investors and how they look at the markets and coming to invest, particularly with us trying to attract $100 billion, $100 billion dollars into South Africa. So yes, I mean, it's a very unwelcome development.
What is the presidency saying about this allegation?
So at the moment, from what I've gathered, the spokesman in the president's office, they've articulated, the need to respect the public protector's office, and as such, we'll wait to see what are the outcomes that are coming out of this. But at some point, all the opposition leaders, they're baying for blood, which means this issue is not going away. It needs to be addressed, fully well. There'll be investigations, and it's interesting to see what will come out of it.
Moody's said that a first quarter economic contraction in South Africa was credit negative. It also cut its forecast for the country's 2019 economic growth to 1.0% from 1.3%. Now, is there a possibility that Moody's might downgrade South Africa credit rating to junk status with all of these going on?
I'm afraid that is looking like a possibility in the coming few months, because by November, Moody's will be rating again. So looking at all the things that are happening around South Africa right now, it doesn't look encouraging. And if that comes to happen, that means most of the asset managers would have to sell off bonds offshore markets, which means we won't be able to borrow. And I hope it doesn't come to that, but it's looking more and more likely that that's the direction we're heading.
Yeah, the issue surrounding the mandate of the central bank, has, continued, seems not to be abating. What's the latest on it?
Well, apart from all the squabbles that have been happening around the South African Reserve Bank, very surprising that you had two voices coming around, to speak about the South African Reserve Bank, which is unheard of. However, the president has come out to say the mandate, stays as maintaining, price stability and trying to have a stable financial system in which can help the economy to grow and so forth. So at the end of the day, we can just look at what the governor, finance minister, and the president are saying, and they seem to be in agreement that at this point, we don't have the macroeconomic fundamentals to leave the South African Reserve Bank to other political factions and so forth who are interested in quantitative easing and possible printing of money. We are not in a position to widen the scope of the South African Reserve Bank as it stands. Maybe in future, when we probably have more fiscal discipline, that could be a possibility.
Okay, just a quick one before I let you go. You are enjoying a public holiday today. What's the outlook like for the week?
I must say it's cold. Social networks around here are also not very friendly to each other. So yesterday with Youth Day, what we are looking at here is the youth and the small business owners. They are really looking towards government to instill some, some really concrete promises in terms of what is going to be done to reduce youth unemployment, as well as promote small business and small businesses. And unfortunately, there's a lot of rhetoric around this, and the opposition and the ruling party, everyone's saying they're going to support, but there are no concrete steps taken.
All right. Thank you for your time at Trinity. The 45th annual meetings of the African Development Bank, which took place in Malabo, Equatorial Guinea, has ended with participants resolving to cut down trade barriers. Our shareholders of the bank also gave a go-ahead for general capital increase in order to speed up regional integration for a new phase of African prosperity.
The annual meetings were attended by ministers, government officials, African Union representatives, development partners, and civil society leaders to discuss the continent's economic agenda. Top on the agenda was the bank's performance, outlook, and the proposed general capital increase, one that the president, Dr. Akinwumi Adesina, says has been welcomed by shareholders to address issues such as insecurity.
When you have electricity, it's easier to track people. It's easier to do drones and all of that. But when you don't have it, the terrorists just enjoy that. And so we must link Light Up and Power Africa to security of Africa. That's why the African Development Bank is within the phase of its new general capital increase period. We are going to invest massively all across the Sahel in what is called Desert to Power. Desert to Power will be the largest solar zone in the world.
And as part of a successful hosting of the meeting, Equatorial Guinea now stands a chance to enjoy some $433 million financing for the next 4 years.
Now we have to work very, very, very fast on visa processes, things like that, to make sure that people can come easily, because now we have the road, the bridges, the ports, everything. But we have to, the administrative side, we have to make it very fast. The visa openness index that President Adesina mentioned in his speech, we are looking at that carefully, because we believe that as this country it is today, we have to open up.
In spite of its significance to the bank, Nigeria was without a ministerial representation at the meeting and is yet to sign the Africa Continental Free Trade Agreement.
And that's it on the program. Thank you for watching. I'm Chimizie Obi Uwago.